Sujeet, we've had a big deal today from Warren Buffett and Berkshire Hathaway, one of their biggest ever deals. He's bought Precision Castparts. Tell me a bit about the deal.
Yeah, so this came together over the weekend, essentially. Warren Buffett has a lot of money and he likes industrial companies, so in that sense, it really shouldn't be a surprise. Precision Castparts is a company that makes components for jet engines. It's seen its shares battered over the last, say, year, just because it does have a decent amount of oil and gas exposure. And so Mr. Buffett has seen a market weakness, paying a relatively big premium. But what's interesting is it's not an all-time high. So he's finding a company that's vulnerable and seemingly paying a good price, but he's got the usual Buffett value investing theme here.
So is he getting a bargain here?
It may not be a bargain in the near term. If you look at the multiples, it's probably reasonable if you think earnings have come down a little bit, so the price is full from that sense. But Buffett's, his MO is to really hold these businesses for decades. And so if you're thinking like he is, I'm going to own this for 30 years, 40 years, maybe forever, and then there's this big cycle in aviation generally that we're seeing where Asia is prospering, Africa is prospering, and there's just going to be tens of thousands of new jets coming online. He's really banking on that. So he's got this long-term mentality where shareholders might be happy with the premium today. So it works out really for both parties.
And how does he finance this? It's a big acquisition, 30 billion enterprise value, obviously less than that in terms of market capitalization. But
yeah.
Does he have the resources to pay for all this, or is he having to go to the debt markets?
Yeah, so it's a little bit of both. I mean, Berkshire Hathaway is a huge company, hundreds of billions of dollars of market cap, so it has its own resources. It has a big balance sheet full of cash. Plus, as Mr. Buffett has noted, debt is very cheap right now. So before interest rates rise, it sounds like he's going to finance about a third of it. And so he's got very cheap financing both from his company and the debt market. So it's a clever time to be buying.
And what's he likely to do with it once he's bought it? Will he want to merge it with something he already owns, or is he going to be happy just to run it as a standalone entity?
Yeah, so his background is really to have these investments as platforms. So they kind of stand alone by themselves and they can do add-on acquisitions, but they really operate independently. He's done that with railroads, he's done that with utilities, and so he'll make a flagship purchase and then just add on over time. So it'll be its own unit, but it will grow on its own a little bit every year.
Oh, Warren Buffett proving once again that he's not afraid to step in when others have perhaps become a little nervous. Sujeet, thanks very much.
Thank you.